This is the RedChip Video Internet Platform, your source for small cap market information.
Great, thank you. So I'll jump right in. We're a local corporation. I'm going to tell you a little bit about the space that we operate in. Jumping to slide 3. For the investors, this is some of the latest data that's come out on local advertising. A lot of people may have heard about it, but the data is pretty compelling. What's happening, as we probably all know, directionally speaking, ad spend is shifting from print media to digital media. And this is the latest numbers out from Burrell Associates, which shows that print media is experiencing this 1% compound annual decline between 2010 and 2015. In fact, this year is the first year in which digital media spend will surpass print spend in the United States. That is a kind of a watershed event. You see down the bottom, the only reason advertising in the U.S. is growing at all over that time frame is because of digital media. It's growing from $20 billion to $38 billion over that 5-year time frame. It's about a 14% compound annual growth rate in terms of revenue growth. So we are in the digital media space. And that's exciting in and of itself. And this is a secular trend that will continue to grow. But what's happening within digital media is a revolution is occurring there as well. And a lot of people don't realize this at all. And if we look to the right-hand side here, local search, that's where we play. Local search is a consumer who's searching for a product or service in a location. For example, washing machine repair in Irvine or flowers in Los Angeles. That's a local search. And you can see 2010 to 2015, the volume of searches, of local searches, of all searches, increasing from about 29% to 35%. And the revenue is growing at a 12.1% compound annual growth rate from $5 to about $9 billion. So what that means is more consumers are spending their time doing local searches, and more ad dollars are flowing in. In fact, it's going to become over a third of all searches on the internet within the next few years. And then you've got local display. Well, the display business is a massive online advertising space today. But again, you see this trend. 20% of all searches, of all display ads in the U.S. today are local, which means they're geographically targeted. And that's going to increase to, by 2015 to 30%. So again, more ad dollars are flowing from generic, nationally oriented display ads into local. That's about a 20% compound annual growth rate from $2 to $5 billion. Another little data point, local rich media, which is the rich media ad units that look like little movies that play within the banner ad, that's actually got a 50% compound annual growth rate over that same time frame. And then you got daily deals. This is a model that didn't even exist 3 years ago. It's a 37% compound annual growth rate to about $4.2 billion by 2015. Obviously, Groupon, the biggest player there. So what's happening, and that's basically daily deals is another local ad unit. It's a performance ad unit. So two trends. One, print media is going digital, and two, digital media is going local. So we have assets in each area, local search, local display, and daily deals. So we're well entrenched in this industry. Moving down to the next slide, if I can get this thing to do that. Sorry, technical difficulties. So here's us, local corporation. So what are we? We were founded in '99. We did an IPO in 2004. We transitioned our business into local in 2005. So our story really starts 7 years ago now. And basically, we're a local media business, and we connect local merchants with online consumers. We do that with a variety of digital ad products. And so all of our revenues comes from advertising. About 70% of our revenues are from pay-per-click, and that's the kind of ad you see at the top of Google, Yahoo, and Bing. About 20% comes from subscription, so that's customers who pay us on a per-month fee, and then 10% from display. And our display business has doubled in the last 12 months. We reach about 1 million consumers each day across over 1,000 sites that we power and we monetize as search display. And we also reach consumers on an email basis with our Daily Deals product as well as on mobile. About 40% of our Daily Deals customers we reach through mobile, and 10% of our local.com customers are on mobile as well. We also have a very powerful technology platform that we've expanded expanded aggressively in the last 12 months. We have 8 patents issued, 11 pending, and we have about 30,000 customers on that platform that we're supplying our digital media solutions to. So that's us in a nutshell. You can see those are our major properties there: Local.com, Crillion, Rovion, and Spreebird. So moving to slide 5, this is our ecosystem. So we reach consumers by, I guess, through our own property, Local.com, those other properties I mentioned, but primarily by search engine marketing on Google, Yahoo, and Bing, and driving traffic to those sites. Actually, about 40% of our traffic we reach organically through search engine optimization, and about 60% through search engine marketing. So that's a combination of advertising and organic usage. But we've also pushed aggressively, again, in the last 12 months, into non-search. And non-search includes daily deals. So we're reaching over 400,000 consumers every day through our Spreebird Daily Deals product, and that's email, through display, and through social media. We have social media marketing products for our small businesses, and that allows us to reach consumers inside Facebook and inside Twitter. So that's how we touch the 1 million+ consumers a day. It's actually closer to 1.5 million. And we display to those consumers ads. And the ads can be, as I mentioned, pay-per-click. There's also pay-per-call through partnerships. We have our own subscription customers, daily deals, and display. And those ads come from our ad partners. Google's our largest ad partner. It's a partner that we added in the middle of last year. Yahoo's been a long-time partner, and Supermedia and AT&T are a couple of yellow page publishers. We have a lot of other partners, dozens of them. We also have channel partners. Regional media publishers like local newspapers are our primary partners there, and they enable us to reach consumers who are on their website through the services that we offer to that website. They also resell some of our products. We actually have 9,000 local merchants within our channel partner platform that are resold by our channel partners. And then we have direct customers. That's the approximately 30,000 direct customers, which are SMB subscribers. They're paying us a fixed rate per month for the services that we offer. So overall, that is our ecosystem. We monetize that ecosystem when we connect consumers and local merchants, and we monetize it with ads. Now, moving to slide 6, the traffic on our ecosystem is extremely valuable. 57% of our users are the soccer mom demographic, which is basically, it's a stay-at-home mom who's looking after 1 or 2 kids. And why she's important to us and to advertisers is she controls 80% of the household spend. So she's directing where that spend is spent. And she spends 80% of it within 20 miles of her home. So when that demographic is shopping online, advertisers want to reach her. So we have a lot of that kind of traffic. But we go one step further. All of our consumers on our ecosystem have searched for a product or a service in a location. And that means they're farther along the buying funnel than most of the other kinds of traffic on the internet today, which means they convert into buying customers at a much higher rate. And on the right-hand side here, you'll see some bid prices that advertisers will pay per click-through to reach local versus what we call national consumers. The first example, restaurant, 22 cents per click. That's how much an advertiser pays Yahoo, one of our long-term partners, for a click-through from a consumer who goes to Yahoo and types in restaurant. But San Francisco restaurant, that's a local search term. It's a product or service in a location. Advertisers will pay $1.27 per click for a customer who types that into Yahoo. And that's a 570% premium. And what advertisers are telling us with these bid prices is that consumers who type that San Francisco restaurant, they convert into buying customers at 5.7 times higher rate than a consumer that just typed in restaurant. 100% of our search traffic on our ecosystem is the local and commercial searcher. And that's why we monetize our traffic so well. And that's why we get partnerships with companies like Google and Yahoo and Supermedia and AT&T Interactive. It's because they want access to our search traffic. It's extremely valuable. Moving to slide 7, we have 3 kinds of customers. We have consumers searching for products and services. We have local merchants who want to sell those products and services to consumers. And we have channel partners that help us to either reach more consumers or reach more local merchants, and sometimes both. And this is really intended to illustrate, in 2010, we had a very limited product set for each of those, and in 2011, we dramatically expanded that product suite. So we'll come to those products in a little bit. But ultimately, some of that expansion was through product development of our own. Some of that expansion was through acquisition. We did complete 3 acquisitions in the middle of last year. And basically what we're doing today is we're selling those products. So how do we serve consumers? We have what we call consumer properties, which is really the aggregation of 2 pieces of our business, which is our network business plus our owned and operated. And so consumer properties represents our ability to reach search traffic. We reach search traffic on local.com, on Trillian, on Spreebird, on mobile devices, by email, and so on. We have thousands, actually closer to 1,200 private label sites that are using our technology on their sites, which that's our regional media network. And ultimately what we're providing to consumers is certainly name, address, phone number of local businesses. We're providing them with ratings and reviews, coupons, daily deals, travel deals, special offers. We have events and activities, the kinds of things a soccer mom would spend her time online looking to do with her family or looking to deploy some of her family's capital in those local products and services. We touched a record 94 million monthly unique visitors in the 4th quarter. That was up nearly 18% year over year. As I mentioned earlier, about 40% of our traffic was organic. Organic traffic matters because it's traffic that we don't have to pay to get into our ecosystem. And we've had a multi-year effort to try to increase the amount of organic traffic. If we go back about 4 years, less than 5% of our traffic was organic. And at that point, we were only touching about 8 million uniques a month. Now we're touching 30 million uniques a month, and 40% of that is organic. So we've increased our organic traffic orders of magnitude, and we want to continue to grow that to about 50% of our traffic, just to keep a nice balance there. The remainder of the traffic comes through search engine marketing primarily. And we're pushing into mobile. We've launched 5 mobile products in the past 4 months, actually 6 now. We launched one earlier this month, or earlier last month, and we've got more coming. So we're very aware that there's this revolution occurring again, and I don't like to overuse the term, but it's occurring within search. In local search, everything's going mobile. The estimates are that within the next 5 years, 80% of local searches will be done via a mobile device. So local corporation is developing rapidly a mobile presence. So moving now to slide 9, and we've, as part of our effort to increase the number of customers we have, we're moving into different segments of customers. One of the companies, or 2 of the companies we bought in the middle of the year were Rovion and Trillian. And Rovion debuted, when we bought them, they hadn't debuted it yet. They were developing a rich media ad authoring platform, and it's called RAMP. And they debuted that at AdTech in November. And basically what it enables a customer to do is to create rich media ad units. It allows them to create them more rapidly at a lower cost because it's a web-based solution for companies like ad agencies or national brands who have in-house agencies. Movie studios can use this to create their own ad units and so on. So it opens up an entirely new segment of company, kind of a Fortune 5000 company that is targeting the local consumer. And we enable them to do that using display on our platform. And the platform allows them to create this and manage the rich media assets on a web-based interface, kind of a software-as-a-service interface. And most importantly is they don't need Flash programmers to be able to create this. And that's a big deal. Flash programmers are expensive. And there's not as many of them as we need. So if you have to change your creative, which you would have to do if you're targeting consumers locally, you might have a different offer in one geography versus another geography, you actually have to get a coder to code that in, not with RAMP. So with RAMP, we're basically going after a new segment of advertiser, and with Trillian integrated into RAMP, we now can provide the advertiser with something that's unique. Somebody like Logitech, as an example, wouldn't have been an advertiser with local corporation a year ago, but today we can enable them to provide, or their agency provide these first 2 panels. Unleash the magic of technology and get comfy with HD video calling. That's a rich media ad unit. But with Trillian integrated in the RAMP, now we can tell a consumer where that product is in stock, in store, right now, and at what price. And that's unique. There's nobody else out there in the marketplace can do this on a real-time basis. So you can see how we're leveraging the different assets that we purchased to create new, innovative new products that are unique in the marketplace. And that also allows us to partner with Best Buy, because we make money off Logitech on a CPM basis, and we make money off Best Buy on a pay-per-click basis, as well as Amazon and Logitech on a CPC basis within that ad unit. So we debuted that in November, and we're building up our client list. That's a very unique product in the marketplace, and that's our entrance into the display marketplace. And we display those ad units on local.com, on our regional media network, as well as on third-party ad networks. And this is new for us, and this is a business that we've basically doubled in the last 12 months. From the beginning of the year, $500,000 to the end of the year, $1 million in revenue on our display business. We served over 1 billion impressions in December alone. So again, we're kind of accelerating growth in the display marketplace. That's a place that's growing about 20% per year, but 50% within local rich media, which is where we're targeting. What do we sell to small businesses, though? That was a high-end product. We have a lower-end product for small businesses. Basically, for $200 per month, we'll take care of a small business's digital media needs. Today, we have Exact Match as a suite of products. We get them social media presence, we get them SEO, we make sure their website is ranked page 1 on Google, Yahoo, or Bing for the kind of product or service they sell in the market they sell it in. We give them display ads, and we have a couple of mobile products that we bundle with that. And we launched this product suite in the beginning of the year. We currently have, well, I'll disclose that tomorrow when we do our earnings call, but we currently have lots of advertisers on that, and it's $200, which is basically 10 times per month what we were selling our prior products for. So we're basically moving up market with a product that enables a small business to reach customers wherever they are, on the web, on mobile devices, and by email. Finally, we have Spreebird, which is our version of Daily Deals. Kind of like Groupon, we partner with a local merchant, we create a compelling offer with them, and then we email that to our list of customers. We have 400,000 customers, those being consumers. But where we differ a little bit is how we reach the consumer. We have a product we call School Rewards. And Spreebird partners with schools, and in fact, they're school PTA. And the PTA is what the fundraising arm of the school. So we partner with the PTA, and the PTA in turn promotes the Spreebird brand to, guess who? Soccer mom. Soccer mom's dropping off and picking up Johnny twice a day. So we're promoting our brand to that audience, our target demographic, and we're hitting them twice a day in some cases. Johnny's bringing home flyers that says, Mom, sign up for Spreebird. My school PTA will get a bounty every time you do, or at least when you do. And then they become subscribers. And now we're targeting hyper-local deals. Remember that consumer is spending 80% of the household income within 20 miles of their home. So we're going to give them daily deals that are in that 20-mile radius. And ultimately, that's what local merchants want. They want customers around them. So ultimately, the soccer mom is going to purchase from the local merchant. And when they do, we give the school 10% of our revenue share from that deal back in the name of the local merchant, back to the school, and it's the consumer's kid's school. So it creates a halo between the merchant, the school, Spreebird, and the consumer, and it's exactly what we want. And the reason we do it this way is it gives us a multi-year opportunity to develop a relationship with that soccer mom audience, and when a kid graduates school, we're still going to be emailing that consumer. And in turn, that reduces our acquisition cost. Our customer acquisition cost in the daily deal business is our biggest expense, so we want to keep that suppressed. And the third part is it makes it very defensible. Once we're in a school and the school is relying on the income that we produce, the switching costs are high. We're in 1,000 schools today. We've given away over $600,000. So it's a program that works for schools. They love it. So moving to slide 13, the technology platform. Again, in the last year, 2 years in particular, we've added these last 4 right columns. We've added Octane, which is SEO, web hosting, and content marketplace. Crillion is real-time product search. Rovion is display, and Spreebird is daily deals. We've had 8 patents issued, 11 still pending, and we're pushing into mobile as we speak, and mobile enabling all of these technologies. And that's our product portfolio, technology portfolio. It's very unique in the marketplace. We're not aware of any other company that has this combination of technology assets. This is our management team. We retooled the management team a little bit in the last year as we wanted to focus more aggressively on acquisitions, on sales, we've brought in a new SVP of sales as well as a new COO with much stronger sales backgrounds than we had previously. We've increased our sales from 20 to 70 salespeople in that 12-month period. We brought in a new SVP of technology and product in order to develop products more rapidly. Our product development in the last 6 months was out of sight. We just developed a lot of new products. And that's my daughter's picture of me. I put that in there because she did a good job getting my tie right there and the hair. So financial performance, slide 15. Basically, this is a 5-year kind of compound annual growth rate of about 40%. We hit a roadblock in 2011. It was a Yahoo Bing alliance, actually the end of 2010. We've talked about it a lot. Basically, that's in the rearview mirror. We've given guidance of about $24 million in revenue. So that kind of dotted line on the right there, the dotted little boxes, that's our exit run rate for 2011 based on our guidance. Of course, we'll report that tomorrow. Yeah, so the challenge we had with Yahoo Bing relates to monetization of our search traffic. We fixed it in October by partnering with Google. And monetization of our traffic is a key performance indicator that we disclose each quarter, and we'll be disclosing that tomorrow afternoon with our earnings call. Slide 16, 4 quarters of transformation. This kind of shows you our revenue over that time frame from Q3, Q4 2010 started to go down, and then Q1, Q2 wasn't supposed to go down there. It was supposed to go up. Q1 is traditionally our strongest quarter, but you can see how it went down. Now, Q3 is when we partnered with Google, and we'd also done some of the acquisitions at the end of Q2 and into Q3, and then Q4 is based on our guidance. So you can see that strong turnaround based on projections. We grew the business 60% in the second half versus the first half. It's a big deal. But you can see the other key performance indicator for us is our traffic. You can see during this period when we were challenged with revenues, our traffic continued to grow. So this kind of illustrates that the issue that we had was uniquely connected to the Yahoo Bing alliance. It wasn't any underlying core issue with our business. And in fact, our core operations are back to profitability as of the third quarter. And so I won't get into this slide 17. We put it out there. The purpose of which we put it out there is to illustrate the long-term growth expectations we have for each of our major revenue streams, O&O, networks, and sales and ad services. And what the gross margins are. We put this in there for modeling purposes, so it can help analysts and investors conduct their own financial models for our business. And finally, this is our ending third quarter. We'll update this with the fourth quarter tomorrow with our earnings call. We had $10 million in cash, about $8 million in debt from a receivables line of credit, and generally we're positive cash flow from operations. We projected break even for Q4, and we did have a loss in Q3, Q2, although we still generated cash from operations during those periods. So good cash flow business, about 22 million in shares out there, about 6 million options and warrants, which represent about $31 million in cash that may be exercised. You can see the strike price is about $4.60 and $7. So with that, I'll open it up to Q&A.
Heath, thank you. We'll go ahead and jump right into Q&A now. Does Local.com expect any changes going forward in your revenue mix? For example, pay-per-click as a percentage of revenue and more revenue from display campaigns?
Yes. You can see that on the chart here we said 70% of our revenues are pay-per-click, 20% subscription, 10% display. All those subscription revenues are direct, and our display revenues is a new growth area for us. And so what you have seen there in that data is we were already shifting the mix. 80% of our revenues were pay-per-click, and pay-per-click for us is all third-party ad revenues. It's Google, Yahoo, Supermedia, AT&T are primarily pay-per-click. And what we're intending to do here is really to transition the ad revenues that we generate away from the third-party ad providers and more to direct relationships. And the direct relationships can be any one of those different ad formats, but ultimately they're advertisers that we have a relationship with, or perhaps we have a relationship with their ad agency directly. And that's that's intentional on our part. So, we've moved from 80-20 to probably a 70-30 at this point. It's been a big push, and we'll continue to grow our subscription base, and we'll talk more about that, and you'll see more about that on the press release tomorrow, as well as our direct display customers.
Thank you, Heath. Next question. I know that you cover many areas, Local.com does, in regards to connecting local merchants with online consumers. Are there any other channels that Local.com is exploring to break into in the future?
Well, we do want to be in lead generation. We think lead generation is an interesting marketplace. It's really the only piece of our product portfolio that's missing today. We do web hosting, we do SEO, we do CPC. We don't sell it aggressively because most small businesses simply don't understand it. And the ones that do are provisioning it through Google, Yahoo anyway, and we already get most of that revenue share from those relationships. So we don't want to do pay-per-call. We partner with a company called Marchex for that. We do want to be in lead gen. And we do want to combine some of our assets like you see with Rovion and Crillion into some unique product offerings in the marketplace. We want to be an email marketing provider to small businesses through partnerships with platform providers there. We think SMS is an interesting area, SMS marketing for small businesses. So we are actively looking at a variety of different channels that we can expand on. But in terms of acquisition, we're primarily focused on really growing our business organically, potentially doing some acquisitions that are accretive within the places that we already operate in. So maybe some ad agencies, maybe some ad networks that are locally targeted. But the only gap that we see is lead gen. We're not in any rush to fill it. We have our hands full. We're excited about 2012. We think the growth prospects for us as a business are very high, and we think we've been executing on that with the 60% growth in the second half. I think is evidence, based on our guidance, is evidence that we're optimistic and have been able to execute on some of those growth opportunities. So we're really kind of heads down on what we have, but over the long term, 2-year horizon, daily deals, lead generation is a place that we will be in.
Thank you, Heath. Next question. I know you touched on this in that last answer, but could you go into some additional detail on Local.com's expansion into mobile devices?
Yeah, so what's occurring in the marketplace is, as we're probably all aware of because we've got smartphones, is we're doing more searches via our smartphones and via our tablets. And that's just, that's just the way things are moving. And so really what we need to be able to do as a corporation is to make sure that our products and services are optimized for that experience. As a great example, our Local.com website, we've had a mobile version of that for years. But with increases in bandwidth for smartphones, with increases in processor speed and browser developments, we can do a lot more interesting things with a mobile version of a website than we could a year or two ago. And so, we have an app for Spreebird that frankly looks a lot like the Spreebird's mobile site. And what we ultimately see, it's interesting, you see this explosion of app businesses, but ultimately with higher bandwidth and better browsers, really a mobile website should behave like an app. And I think that's where we're headed with this. And so our view is, apps, maybe a little bit of a bubble over there. Some apps are here to stay. But ultimately, an app to make your website more useful ultimately should be necessary. You should have a great website via a mobile device. So that's really where we're placing our bets, and we're saying we want to have websites that behave like apps and that consumers can engage with on the go. And so we've launched a number of new sites. Spreebird I mentioned, Local.com I mentioned. We have mobile products where we mobile enable some of our products for our small and medium-sized business customers, our SMBs, as well as we'll mobile enable their own websites if they already have websites. What you'll see coming down the pipe with Crillion is, a kind of a local product search. If you're in Best Buy and, you type in a product name, we want to be able to tell you where else that product is available and at what price around you, so you can get the best price as a consumer. And we have a massive database of data in connection with that, and that product should be coming out pretty quickly. So, you know, our goal is ultimately to capitalize on what consumers will be doing via their mobile devices. Frankly, it's going to be a lot of the things that they do via the website today, but we want to make sure that that experience is optimized for their mobile device.
Great, thank you, Heath. I know you discussed the Spreebird in your presentation, but could you go into some further detail about Spreebird and what the value that product truly brings?
So what it does today is, for us, it fills in a gap. And we have a portfolio of web properties, but at the end of the day, we're connecting local merchants with consumers. And we do that through the variety of properties that we have. One of the big challenges for any web property who focuses on connecting local merchants with consumers is called the online-offline gap. And the online-offline gap is, we can talk all day long about, you know, we're delivering a lot of value. And frankly, we do deliver a lot of value. We know that, and we can prove that. But customers, our customers, the SMB, they don't equate anything to value. All they equate to value is, how many customers did you bring to my register? Sometimes they don't know when we're sending customers to their register. And with some of the mobile products that we're bringing to market, we're going to help prove that and close that online-offline gap. Daily Deals is unique because inherent in that model is the process by which a consumer comes to the register to redeem the product that they bought online. So this is the first product that's truly closed the online-offline gap. Not only that, it's powerful because it's a product or a business that exists outside of the search ecosystem. So Google can't touch it. You know, Bing can't touch it. It's within. It's an email marketing tool for small businesses, and the platform is managed by Groupon and by Spreebird and, you know, and the other companies in the space, Living Social and so on. So for us, with a portfolio, a local corporation, as having a portfolio of products, it creates a unique thing for us. It allows us to demonstrate to our small business customers, in very real and tangible terms, the value of digital media. It allows us to prove to them why they should be spending their money online, and if they're already spending it online, why they should be spending it with us. So that's an important piece of the overall puzzle with digital media generally. So we have an asset there that other people that may compete with us, you know, with just local.com, they don't have that asset. And so that gives us some competitive strength over time. So that's just Daily Deals generally. And then we've got, you know, our way of doing Daily Deals, and we think that's very valuable over time. It's not a 1 or 2 quarter strategy. This is a multi-year strategy to reach consumers in hyper-local markets and market our SMB customers to those consumers using a variety of our ad products. And the way in which we reach those consumers with our Spreebird, our school rewards program, is unique, and we think is a defensible position in the marketplace. We're in 1,000 schools today. For a competitor to try to get us out of those 1,000 schools, it's going to be a lot of work. It's going to be expensive. So you limit your competition to only the companies that can afford to do that, and that's a very limited set. So we like it for that reason as well. Then there's a third reason, which is we're not standing still with any of our products. We're continually developing new products, and one of the products that we're launching, or excuse me, developing today quickly, is a rewards program. What we ultimately want to be able to do is to show not only that we've driven traffic to your register and generated a certain amount of revenue for you today from your daily deal, but we want to be able to show you that how frequently those customers come back. And we're going to be launching a rewards program for that does just that, that allows us to show any Spreebird customers, to show to the merchant how much that customer spent with that merchant over the next 12 months, 24 months, and so on. And that particular product, once that launches, that can be then leveraged across the rest of our business as part of our small and medium-sized business digital media suite. So we think we have we're really entering a new period in our business where we're able to really leverage off the other assets that we've purchased or developed in a way that's highly unique in the marketplace and that limits the amount of competitors that we have, because I can't think of one company today that has all of those assets at their disposal focusing in on this segment. We certainly have big competitors in different spots and limited competitors in some spots, but when you put it all together, we have very limited competition at all. And it's up to us to really execute against that, and that's what 2012, 2013 is about for us.
Thank you, Heath. Do you have an estimate on approximately how many local businesses engage in online advertising today versus those that are still only using traditional methods of advertising, such as print advertising?
I don't have an updated number on that. It's a great question. The old estimates was about 50%, when I say all the last couple of years. So believe it or not, about 50% of small businesses do not have a website. That's kind of the core of what you need. You know, I've heard these numbers that 70% of businesses have a Facebook presence. I don't believe them. I don't believe it. I don't believe those numbers. I don't think they're accurate. I think a lot of agencies are doing that to show value to small businesses as a lead generation tool, for example. But if a business doesn't have a website, it's probably not going to have a Facebook presence, in my opinion. The reason for that is not because there's anything wrong with Facebook. It's just that businesses, small business owners, are busy running their businesses. They're not experts in digital media. That's what we are. So we want to present that value to them. So if they're not savvy enough to have a website, it's probably likely they're not going to have a Facebook presence for the same reason. Now, we offer up a Facebook presence as part of our suite of services. But ultimately, as I said, you see that transitioning spend from print to online. Part of that is you got to be online at all. You know, some of that's generational. Some advertisers are very savvy. They've been online for years, 15 years maybe. And others that are older business owners maybe still don't have an online presence or any meaningful one. Whereas somebody who's starting a business today, it's a no-brainer. Of course you're going to be online. The first thing you're going to look for is, can I get a website URL that is consistent with what I'm trying to do as a business. So, you know, there's going to be no shortage of businesses that are continuing to move online. There's no shortage of businesses continuing to shift their spend online. That's where we're focused on with our existing product suite for SMBs. Then we've got a new opportunity which we're creating with some of the more sophisticated product suites off our platform, which is the Fortune 5000 customers. They're already online. They're already spending money digitally. We want to make sure we capture a portion of that spend. So that's coming down the pipe over the next year or two.
Thank you, Heath. I believe that concludes our question and answer session for this afternoon. I want to say thank you on behalf of RedChip and all those participating for making time to present today.
Great. Thank you very much.
This report is not a recommendation or solicitation to purchase or sell any security, nor does it constitute investment advice. Visit RedChip.com for full financial disclosures on RedChip clients.